So I've been saying on television and radio and in all of my articles for years that life insurance is something that's overlooked by most people. And I will say, I say it in both of my books, I own 10 life insurance policies. I used to, now I own 9, and I'll explain why. But people would say, why in the world would you own 10 life insurance policies? It's like the last thing on the importance list for people. It's like pulling teeth to get someone to want to own a life insurance policy. Well, here's the thing, 2020 really changed a lot of people's opinion on the importance of owning life insurance in your personal life and in your retirement portfolio. 90 billion people benefited from life insurance proceeds in 2020. Why? Because of COVID. All these deaths that took place. And thank goodness the people that passed had life insurance policies in place. A lot of them did. That 90 billion that went to beneficiaries was tax-free, and that was a 15.4% increase from the year before. Now, what's the flip side of that if you don't have life insurance in place? There's no benefit to the family. And if it's the income earner that passed away, then you leave them having to replace not only your income, but deal with the loss and all the changes in life. Why do I own 9 now? My father passed away in 2022. And thankfully, even though he was a financial advisor and he was a CLU, a chartered life underwriter, he did not own a life insurance policy on himself. And I begged him and poked and plotted with him and said, hey, for your benefit and for Mom's benefit, you each need to own a policy on each other. Dad took a policy out on himself on 2010. And when he passed, and it was unexpected, it was the second largest financial asset he left my mother. Thank goodness he had it. It will provide for her for the rest of her life. So much of the time, though, people don't have them in place. And so we want to talk about the importance of life insurance. It's suggested that you own 10 to 15 times your current salary in life insurance in order to be prepared for your family in case something happens to you. So let's talk about the 2 key types of life insurance. The first one, and probably the most popular, is term. Why is term the most popular? Because it's the cheapest in most people's mind. You can get a lot of insurance for a small cost. But don't be fooled by one thing. Hidden in the word term, it is short for terminate. That policy is going to terminate at some point. So a lot of people will buy a 5-year, a 10-year, you can get a 20 or even a 30-year term policy. But remember, you're renting the house, you don't own it. You're renting that policy for that amount of time, and you have to die to get the benefit from that policy. If you don't die during that term and it expires, the insurance company is going to keep all that money, and you just had it there as a mode of protection. Now, if it's short-term planning, like you're a business owner and it's a buy-sell agreement, or you did it because you wanted to replace your income if something happened to you, a term policy is great. It may also be because you're newly married and it's all you can afford, then it's okay. But a term policy should not be your long-term financial plan, because you very well may outlive your term policy and then you didn't get any benefit from it, okay? So it's been said, the most important life insurance policy you own is the one that's in force the day you die. If it terminated and you didn't own it, even though you had it for 30 years, if you die in year 31, it didn't do you any good. So make sure that you have one that's in force the day you die. And that would mean the second type of policy is a permanent policy. You need to maybe have some term and some permanent policies in place. Permanent means what it says. It's never going to expire. The cost of insurance almost never increases on a permanent policy. And it's going to be there no matter what. And a lot of the times, a permanent policy, even though it costs more, in the long run, it doesn't, because it truly pays out. If the term policy doesn't pay out, how much did that cost you to not be prepared to have money left behind for your family? Permanent policies also build up cash value inside them, and that cash value can be withdrawn and used tax-free during your lifetime. So let's talk about some of the benefits to owning term and permanent policies. First of all, protection. So the average American right now has over $92,000 in debt. That could be college loans. For most people, their house is the biggest part of their loan. It could be vehicle debt, but $92,000 per person. Well, what happens if you die carrying that debt? Having a term or a permanent policy there to pay off all the debts is very important. That's so for protection. Tax benefits. There are a lot of tax benefits living and post-living. Most people think of life insurance there as a post-life benefit. I'm going to leave tax-free money to someone else, but it doesn't benefit me. It's not true. When you own a permanent policy, there's actually cash value build up inside the policy, and you can use it while you're alive. It's called a loan, taking a tax-free policy loan, and you can use it for anything you want. You can purchase a vehicle with it. You can purchase a new roof for your home. You can take a vacation. You can buy a home with it, whatever you choose to do. I have a lot of clients that have permanent policies, and they use it to buy real estate, to buy rental homes, okay, taking those loans from those policies. So there's all kinds of living benefits from it. And remember, if it's taken as a loan from a life insurance policy, you do not pay tax on that loan, okay? Cash value is another great benefit to a permanent policy. Cash value can be used for anything under the sun, like we talked about. It could be for real estate, a vacation, whatever. But another great benefit is building up cash value inside a policy like this in lieu of a 401k or an IRA, because those are tax deferred. And when you take the money back out in retirement, you're going to owe Uncle Sam and you're going to owe your state tax. When you take it as a loan from a life insurance policy, you don't report it as income. It's tax-free. It does not affect your Medicare premiums. And so it's very, very important. I write about lots of different ways to own life insurance and why you should own it. In both my books, I have a dedicated chapter, Safe Money Matters and Bulletproof, the Safe and Secure Retirement Income Plan. There's chapters committed to life insurance. Why? It's a very key, important part of financial planning. So make sure that you're covered in the event that you have emergencies, and also for retirement planning so that you can take out tax-free loans in the future to benefit you and your family.